price and send the stock market crashing. Find out next on Adam Smith's Money World.
This program is set in motion by a grant from the MetLife family of companies.
Derivatives of oil go into fertilizers, which means lower costs for food. Plastics come from oil. Cheaper plastics mean cheaper garden hoses, baggies, all sorts of other things. So the question now is, if oil turns around again, does inflation also come back? And if the expectations of inflation return, is that wonderful Wall Street party over? This is a story about the oil markets and OPEC's attempt to control them. Saudi Arabia's vast reserves made it the leading OPEC power. Saudi Arabia had always been the swing producer. If other OPEC countries produced too much oil, Saudi Arabia produced less so that the OPEC price would be supported. But by December 1985, the Saudis were angry at OPEC countries that were cheating, and the Saudis wanted to force non-OPEC countries like Britain and Norway to follow OPEC pricing. So Saudi Arabia began a high-stakes game of chicken. It opened the tap and began. Saudi output rose from 2 million barrels a day to 4.5 million. Predictably, oil prices crashed, hitting a low of $9 a barrel in July. That was enough to bring OPEC members to the bargaining table. In early August, OPEC members announced a truce in the price war. They agreed to cut back production on a trial basis for the months of September and October. Iran and Iraq were exempt from the cutbacks. Both needed oil revenues to pay for their continuing war. OPEC meets again in October to decide whether to continue the cutbacks. Joining me now in the studio are three experts on oil prices and politics. John Treat, executive publisher of Petroleum Intelligence Weekly, David Mizrahi, editor of Mideast Report, and Tom McHale, senior economist with Drexel Burnham Lambert. Tom is a frequent guest on our show, and he has been uncannily correct in his predictions on oil prices. And gentlemen, welcome. John, is the OPEC agreement working?
So far, it's working better, I think, than many people expected. In fact, the production is actually lower than their quota by a little bit.
Why is it working so well?
Well, I think anybody can exercise some restraint for a few weeks. The challenge is going to be whether or not it will last.
Well, Tom, do you think there will be any... People used to worry about OPEC countries cheating on their quotas. Is this over? Are they all going to stick to their quotas, or is there still a danger in the future?
Well, as you know, I've always considered OPEC nothing more than a media event. I have not considered it an important element in the long run in terms of oil prices. For that reason, whether people cheat or do not cheat is not as relevant to the price movements as most people consider right now.
Frankly, they are going to cheat.
Why
they
do you
are
think?
going to cheat.
Why?
Why? Because I think I know a little bit the third world mentality. And as a matter of fact, they need money. They need foreign exchange.
John, quickly, what do you expect to happen as far as this agreement is concerned, keeping the quotas and the success of OPEC?
Well, it's absolutely critical that the agreement be continued, that OPEC reach an agreement to continue production restraint in October. The difficulty will be the Saudis are very nervous that they not return to the world of a year ago where they are called upon to always be the swing producer.
Isn't that the key point, that as soon as the other countries really have to share the burdens, they don't want to, and that the thing falls apart again?
Absolutely. I mean, the test of OPEC is not the test of 3 weeks or 6 weeks or even 12 weeks. It's a test that they're going to have to stand for several years.
If you had to bet on it, how would you bet?
They have such an overwhelming economic interest in making some sort of agreement work I believe they will find some way of keeping the markets from falling to their totally uncontrolled levels, which would probably be around $5 a barrel.
Okay, they could keep the markets from falling, but that doesn't mean they could push the price up.
That's correct.
That's right.
What I think I hear you saying is that OPEC is now together enough to have an oil defense, as you'd say in Sunday afternoon football, but not an offense.
But even the defense is relatively limited because, remember, we're down to about 30% of the total world production being produced by OPEC as against somewhat over 50% only 5-6 years ago.
A price of $7, which they've experienced recently, it does wonders to concentrate the mind.
One wild card in the oil price picture is the Iran-Iraq war. This is a story that is usually buried back on page 27 of your local newspaper, but nervous oil traders are starting to pay attention as the war heats up. To get an idea of what's going on, we have pieced together some of the latest intelligence.
Briefing book, The Iran-Iraq War. Background. The Iran-Iraq war has dragged on for 6 years. Iraq's superior air power and Iran's larger ground force.
Iraq and intimidate the Gulf producers, of course they will have an upper hand, not to say a big say within OPEC.
Suppose something happened to either the Ayatollah Khomeini or Saddam Hussein. Since there's such personal animosity, would that bring an end to the war?
I would think yes.
Really?
Yes.
The Ayatollah Khomeini is very old.
If one of them disappears from the scene, I don't say by death, that would hasten the end of the war, in my opinion.
John, is this going to affect the real output of oil or the...
It's difficult, it's painful for them in many ways, but there is no good reason to believe that if this fall offensive fails, that Iran is going to quit and negotiate an end to the war. I just don't see that.
We think that they are only war criminals. They have killed thousands of our innocent people. They have used chemical war. They have destroyed our cities. They have attacked civilian areas. They have fired at the civilian aircraft. They have attacked the third-party innocent vessels in the Persian Gulf. There is no war crime that they have avoided. And therefore, they are not in a position to make any proposal. I think every defeated aggressor ultimately becomes a peace negotiator. But he is not welcomed, I guess.
Well, Tom, John, suppose the Iranians did win. Couldn't they use that victory to intimidate the rest of the Persian Gulf and force the price of oil up or whatever they wanted to do?
No, I think the reactions, the political reactions, would be immediate and very decisively against them.
The reactions from whom?
From the Americans, from an increasing unity in the Arab world.
But you know, the Iranians are indifferent to what happens to the Americans. Couldn't they intimidate the rest of the Persian Gulf if they had defeated Iraq?
Well, I think that they definitely would acquire more intimidation value, and I think they also want a higher price than the Saudis do. And as a result, I think that they probably would try to. That has to be tempered by the fact that both the Iranians and an Iraqi regime, whatever it was, need money. The war has distracted them from economic development, and I think they would find increasingly pressures to produce oil, to make the revenue, to have the economic growth.
You did hear the Iranian ambassador say they produce enough for their own needs and are relatively indifferent to the rest. What was your reaction to what he said?
Well, I'm sure he believes it, but on the other hand, he's had a population that has been distracted by a war, and they may come to ask for more butter and less guns.
Well, I think that the Iranians, if they can, they would produce more and more oil. The ambassador has said that because they are limited in their production due to Iraqi attacks. In answer to your question, yes, if Iran overruns Iraq, Iran is going to intimidate the southern part of the Gulf. I mean, the Arab countries, oil-producing countries.
But then they could have their own way within OPEC.
I think they can have their own way. If you recall at the last meeting at OPEC, Iran had in a way its way.
That kind of victory, yes.
That kind of victory. Now you can imagine if they overrun Iraq and intimidate the Gulf producers, of course they will have an upper hand, not to say a big say within OPEC.
Suppose something happened to either the Ayatollah Khomeini or Saddam Hussein. Since there's such personal animosity, would that bring an end to the war?
I would think yes.
Really?
Yes.
The Ayatollah Khomeini is very old.
If one of them disappears from the scene, I don't say by death, that would hasten the end of the war, in my opinion.
John, is this going to affect the real output of oil or the psychological perception of oil traders about the output of oil?
Well, there's no
this
doubt
particular war. I mean.
Yeah, there's no doubt that the war has a tremendous psychological hold on the attention of oil traders in the world. And I think any dramatic development would immediately have an impact on futures market and on spot trading. I think the critical thing to remember, as I pointed out, is though these countries have vast revenue needs, and there might be a short-term effect, but one needs to think about the longer-term needs these countries have for oil revenue.
The intricacies of Middle Eastern politics have a lot to do with the price of oil, but beyond the politics, there is the economics of supply and demand. Let's take a look. This is the oil futures market in New York.
They overproduced by 2 to 3 million barrels per day through May, June, and July. So the amount of oil that went into inventories might have been as much as 200 or 250 million barrels. So in effect, they produced this summer the kind of seasonal increase in production that they usually put into the market in the fall and the winter. And the problem that they have now is the market won't want any more oil until some of that surplus has been worked down. And we don't know right now whether that will be in October, November, or in December, January. My guess is December, January.
That's short term, and the forecast for the next few years.
Certain efficiency. We are not going to do away with that policy just because the price of oil is cheaper. So our automobile fleet is forever more efficient than it would have been had oil prices not gone up to $30 a barrel. Similarly, on the residual fuel oil, the policy of South Korea with respect to nuclear power plants is not going to change simply because fuel oil is cheap for a year or 2 or 3. Those are structural investments and structural changes that have altered the oil industry forever for all practical purposes.
So oil demand has leveled off. Meanwhile, supply has those major finds in Mexico, Norway, and Britain reduced the role of the OPEC countries. Today, less than 18% of the world's oil comes from the Persian Gulf. In 1973, it was more than twice that, 37%. The Gulf states are not likely to get back that. The world is still growing, so demand will increase. Many of the smaller oil fields outside of OPEC, like the North Sea, will be drying up, while the Middle East sits on 57% of the world's oil reserves. And here at home, today's cheap oil is turning rigs like these into tomorrow's dinosaurs. American oil is expensive to produce, and finding new oil costs even more, so when prices fall, rigs like these stop pumping. They can't turn a profit. Today, there are only 740 rigs working in the United States. That's compared to over 4,500 only 5 years ago. When prices do start to rise, it will take years to find new fields, dig wells, and get the oil into the pipelines. By 1990, we will be much more dependent on imported oil, putting OPEC back in the driver's seat. Well, if we are much more dependent on imported oil by 1990, is not OPEC back in the driver's seat? Stop looking for oil.
There's no doubt that time is on their side. They have the reserves, and eventually the world will once again have to beat a path to OPEC's door. The only question is a matter of time.
Is there no way around this course?
Well, I think that a lot of it rests in OPEC's hands. In a way, OPEC can, by making an agreement to keep prices at a moderate level, can cushion the transition that we will experience. On the other hand, if things fall apart and prices go shooting down, they'll come back much more strongly, and it'll be a much more dramatic sort of turn of events.
But isn't there anything we could do about it?
Well, I think we already have. We are de-energizing our economy, and the world in general is de-energizing the economic growth patterns that we have. In other words, we use less energy and certainly considerable less oil per incremental percentage of GNP. We have certainly accelerated our capacity for intra-fuel substitution. All these, I think, have a tremendously significant bearing on what options are available for the major oil producers.
Well, let's get to the crucial question. Tom, this is the moment. Give me your best guess on the price of oil in 1 year and 5 years.
Well, certainly in 1 year, I think we can expect bouncing prices, and I think they will bounce anywhere from as low as $8 up to $16 or $17. I think this immediate year ahead of us, we'll see a great deal of fluctuations in oil prices.
And how about in 5 years? We were just talking about not looking for oil and becoming more dependent.
In 5 years, I think we are going to have oil prices somewhere around $15 or $16.
Almost the same as it is now.
Yes.
Do you agree with that?
Basically, yes. I think prices are going to be, for the next 5 years, between $10 and $20. They will probably average around 15, but they'll rarely be 15. We're going to see a lot of movement in prices.
But your first question I'd like to answer, will OPEC regain its power? I would say that in 1990, yes, OPEC would regain its power. But it will be a contained power, a limited power, because I think the OPEC countries have learned a lesson, if anything, that the West cannot always receive orders from OPEC, and the West can react to OPEC.
And even if the lesson hasn't been learned, there's a tremendous surplus of natural gas and of coal out there that can be brought on stream very quickly. And if oil prices start climbing back up to very high levels, we have now that to keep things from getting out of hand.
Historically, real prices for oil have been amazingly stable since the turn of the century. If we look at prices today, they are gradually going back to what they were in the first 72 years of oil pricing history in the United States.
Then the 1970s was an aberration that you don't expect to reoccur.
That's correct.
Gentlemen, thank you very much. Look at the interdependence we have in the world today. Automobiles get more mileage, oil goes down, inflation cools. Inflation cools off, the bond markets heat up, and the stock market follows. But the Iranians threaten southern Iraq, OPEC has a good meeting, the price of oil starts up again, and then so do the prospects for inflation, and a shadow falls over Wall Street. There are connections and connections, not all of them seen on the nightly news. I'm Adam Smith. See you next time.
We welcome your comments and will be happy to send you a transcript of this program. Please send $3 to Adam Smith's Money World Transcripts, 2 John Street, New York, New York, 10038. Please specify the subject of the program.